Hello, good people. How are you? I hope you are doing fine wherever you are. I am the ACCA tutor, Mr. Mtumkulujeri. In this video, we are going to do question floor tiles, which is a past ACCA taxation Zimbabwean variant exam question. Okay, which was written sometime in June 2013. So we have, readjusted the question to ensure that it is adaptable for the upcoming and relevant ACCA taxation examination. That is June 2025 and December 2025. So we have changed some of the figures and the tax years. All right, instead of 2013, for example, we have we have restated the year to 2024. All right, so those are the changes. So if you locate the question on the ACCA website, do not be shocked to see the figures having been altered. Altered. We wanted to ensure that students get as much benefit as possible from watching our videos. All right, so let us read the question. Ladies and gentlemen, I hope the question is clear and visible on the screen. Floor Tiles Private Limited, FT, was incorporated on 1 February 2024 and specializes in the manufacturing of floor tiles for residential and commercial properties. FT owns an industrial building and production equipment which produces custom-made tiles as per order. FT sales revenue has been steadily growing. So that's something that should ring a bell in your mind. The following are the extracts from the sales and purchases ledger of FT for the 11 month ended 31 December 2024. Like we have said in our previous video on VAT, that VAT normally looks at the sales and purchases ledgers. All right. Sales could be for fixed assets or for ordinary goods and services. All right. So you just have to be flexible in your view on what constitutes a sale and what constitutes a purchase. All right. Because those are the two sides that are going to be considered in the computation of VAT. Either the output tax or input tax, and we would want to know the difference, whether it is VAT payable or VAT refundable. All right, so this company started trade in February 2024. All right, so obviously it has been in operation for 11 months to 31st December 2024. All right, so information from the sales ledger. This is the information which gives us the output tax. All right, that's where we get the information containing output tax. All right, so these are the monthly sales, because this is information from the sales ledger and it has been given per month. Okay, February, March, April, and so forth. So these are the sales figures per month. All right, now you know that a person is compulsorily required to register for VAT if a firm or a person, if their sales or their turnover reaches 25,000 annually, okay, 25,000 USD or the ZWE equivalent. Remember, Zimbabwe uses a multi-currency regime, okay? So sometimes the US, sometimes the ZWE. the currencies to be used. So if 25,000 is the annual threshold, therefore the monthly threshold should be 25,000 over 12. This should be how much? Let me use the calculator then. 25,000 over 12 months. So the monthly threshold is 2,083.33. So this means when in a particular month, the sales reach 2,083.33, then that's when the entity is obliged to register for VAT, right? So using this information, we can actually see that this company was due for VAT registration when they reach this amount. Not that one, but this one. All right. Let me look for good. So they reached the target, the threshold for compulsory VAT registration in March. Okay? But as we'll be reading the question, we'll understand or we'll learn when they actually registered or became compliant for VAT. Let us continue reading. But a clever student should have actually at least obtained some sense in the information provided. Now, the purchases ledger. This one talks of, gives information about the input tax. Okay? But please remember, input tax is only claimed from registered VAT operators. Okay? From registered operators for VAT purposes. So if you meet a purchase, like for example, for in June, they procured item from a supplier who was not VAT registered. Okay, those NAs suggest that there was no VAT number. Here there was no VAT number. So you are not going to claim input tax in those sales. In those purchases. All right, let's proceed. So you need not to read the question like you are reading a storybook. You need to be reasoning as you're reading the question. Now, there were also expenses. These expenses were including VAT is appropriate. Okay, so it is now your duty to then say which ones we actually including VAT, because you now know from your theory items which could be chargeable for VAT purposes. Right? You have that information, and it is time for you to just tell yourself, no, this one is VAT chargeable, this one was not, and so forth. That's why the examiner has to say VAT was included where it's appropriate, which means there could be information given which in which VAT was not charged. All right, good. So if we look at the this information, you can see that items like motor vehicle expenses, this one's VAT is chargeable, stationary VAT is chargeable, but salaries and wages, these ones now, the payroll costs, these ones do not attract VAT. All right, I haven't seen a pay slip where the employer has been charging VAT on their employees. All right, obviously the employee is not going to produce any VAT registration and so forth. All right, so by logic you should have actually identified that. Then other office expenses, yes, we can assume that VAT applies there. Additional information: FT registered for VAT on 1 July 2024. So that's when they register. But they should have registered when? They should have registered in March. So as you're reading, you can actually see that this company was actually a troublesome company in terms of VAT compliance. All right. Uh, so they then complied with all the other similar registration requirements on the same date. So that's when they actually met the VAT registrations. So, but that does not exonerate them, right? Does not exonerate them from whatever liability linked to VAT registration, which they could have incurred. All right. So let us get straight to the requirements. Number one, state 4 advantages of voluntary VAT registration. 4 for 2 marks. So if you didn't watch our previous video, then you will be in trouble. All right? You will be in trouble. We stated in the previous video that one of the advantages, number one, okay, you need to be listing your solutions on the word processor or something that is going to be marked, all right, or your Excel document, whichever where you would want to present. Especially, you can just do everything on the spreadsheet and so forth as you'll be attempting. All right, the CBE environment is actually going to give you the portion where you will be required to input whatever solution you would want to enter. All right, so that one shouldn't be a worry for now. All right, so one of the advantages is that the VAT certificate, actually, registration certificate, is usually required by many suppliers, as it will allow them to claim input tax. All right. Number two, we talked of goodwill with Zimra, right? Being VAT compliant without having met the compulsory registration threshold is likely to bring some goodwill between you and the revenue authority. So there's going to be some goodwill with Zimra, which is likely to be considered when applying for a Form 263 or for a tax clearance certificate. All right? They're likely to consider that. This guy is, tax compliant and so forth. He's VAT compliant. He has come up without, an obligation. He has come out voluntarily. Then why should we have to scrutinize him cruelly? We just have to at least, give him the test clearance, as he is actually proven to be a law-abiding citizen. All right. Point number 3. Once you have registered for VAT, you can as well claim any input tax you have been charged, or you are going to be charged. So you become eligible for input tax claim. Doesn't mean it Okay, I'm sorry, the video recording had cut. Now, I was saying, it doesn't matter whether you have met sales at a certain threshold or not. Once you have voluntarily registered for VAT, you will be eligible to claim whatever input tax you are going to be charged by your suppliers, and that will boost your cash flows. All right. Then we talked of you, having the chance of obtaining the tax clearance certificate easily and quickly. Now, we need to expand that point because telling the examiner that you are likely to get easily the tax clearance certificate is not going to earn you any mark. You need to explain that having a tax clearance certificate is likely to, excuse you from the withholding, the withholding tax, which is charged on businesses without tax clearance certificate, and there would be a saving on withholding tax of 30%. It is now 30%. Watch out. Okay, I've actually told you of the changes. All right, the VAT threshold used to be 40,000. Actually, it had decreased from 60,000 in the 2013 period. Okay, around 2013 it was about 60,000 USD annually, and then it reduced to 40,000. But now for the year 2024, right, which is the period that is going to be tested in your upcoming examination, it is 25,000 USD, or its ZWE equivalent. All right, which means you then have to say per month, that's 2,083.33. All right, that's when the entity on a monthly basis should register for VAT. All right, now the withholding tax on trading arrangements where the supplier doesn't have a valid tax clearance certificate, the customer should withhold 30%. It used to be 10% withholding tax, but it is now 30%. Please watch out, because that's again a trick bit in this upcoming examination. All right, so far we've pocketed 3 points. The other point that is as well valid is that by registering for VAT voluntarily, we are defending, we are actually reducing our exposure to penalties. We are reducing our exposure to penalties owing to potential non-compliance with VAT regulations. For example, if we do not register in time, we might be occupied by something else during the year, forgetting to realize that we have surpassed the tax threshold. The VAT compulsory registration threshold. All right, like in this case, we have seen that this company met the compulsory registration threshold in March 2024. However, they then discovered this in July 2024, and they became compliant on the 1st of July 2024. So you can see that put them on an exposure to penalties and interest related to VAT. Is that clear, ladies and gentlemen? So it reduces voluntary registration, reduces exposure to penalties and interests from late registration. I'm sorry, I hope you guys are just getting what I am saying. I'm sorry, I have made your screen cluttered Okay, let me just wrap off these things and then try uh, to proceed with the other questions. All right, so that's it, ladies and gentlemen. Let me just tidy up the screen. Zimbabwean Deyero, ba ba ba. Zimbabwean Deyero, parema, Zimbabwe. Okay, guys. Let's continue. Let's continue. Now, state by when Float House Private Limited should have registered for VAT and submitted their first VAT return. Okay. Now, we need to know which category is this company. Okay, it's very, very, very important. All right. Sometimes, if if the examiner is not, if the examiner doesn't give you the information about which category this company is or belongs to, then you need to tell yourself that by default they are a category. Excuse me, they're a category C. Okay, they're a category C VAT registered operator. Okay, so let us check. But if we are not going to find that information, we tell ourselves that they are a category C. So I can see that there is no such information there. All right. So category C is actually a default category. All right, say a default category, but it is normally for those businesses, okay, which are big enough, right, and whose revenue has reached 240,000. We know that theory. However, if we are not given any other information, like for example, if we try to add the sales, we can see that they can't reach 240, so we can't base our judgment on that. But tell yourself that category C is actually a default category. If we do not have any other information, then the person goes into the category C, all right, and that's when they should. In the category C, you are required to remit the VAT due. Okay, the VAT for the month just ended by the 25th in the following month. Is that clear? By the 25th in the following month. So this guy is the FT. We have discovered that they should have remitted, registered for VAT in March. According to our analysis, we discovered that in March, that's when they reached sales of 2,200, which is above the threshold. The threshold is 2,083.33. So they should have reached, registered for VAT by March 2024. All right. So this means, so they should, tell the examiner, they should have registered in March 2024 and submitted any VAT or the VAT return, submitted the VAT return by the 25th of April 2024. Then you get your 1 mark. Is that clear, ladies and gentlemen? Okay, we need to be very, very careful and as informative as possible in our answers. So, here we didn't indicate why we are saying they should have registered in March 2024. All right. we need to say they should have registered in March 2024 when, tell the examiners, when they surpassed the minimum threshold of 2,200. Okay, when they reached or surpassed the minimum threshold of 2083.33. All right, when they surpassed the minimum threshold of 2083.33, right, and submitted the VAT return by the 25th of April 2024. All right, I think I have covered everything that is required, to get that 1 mark, because it's not easy to get a mark in an ACCA examination. So I think I have explained everything. All right, they should have registered in March 2024 when they surpassed the minimum threshold of 2083.33. That's the threshold, this one. All right, not the amount in the ledger, but this one. The amount in the ledger is just supporting the assertion that they have exceeded the threshold. But what was the threshold? If you are able to tell the examiners the threshold, then even if you are wrong, even if the threshold you have is different from what the examiners have, you are not going to lose any mark, because you have shown that you are alert to that tax idea, right? You are alert to the issue, right? So they're not going to penalize you, right? They're not going to penalize you for that, all right? So, but you need to then tell them that you are actually alert to those facts. You are alert, all right? And you need also to point out that this should be remitted by the 25th of the following month. And the following month after March is April 2024. Then you get your full mark. Is that clear, ladies and gentlemen? Good. Let us proceed to the question requirement. State any 4 statutory duties of a registered operator. 4, and you get your 2 marks. The first one, the registered operator should charge and collect VAT, right? Whenever they make a sale or whenever they supply taxable supplies, right? You need to charge and collect VAT. They need to remit the VAT payable to Zimbabwe by due date. Please point out, by due date. Please do not tell examiners points like they should also collect input tax. No, you're not going to get any mark. Yes, it's your privilege, but in the eyes of the taxman, those are not duties. Okay, they are your privileges, but they are not duties. Actually, the taxman would want you to just remit everything, all right? But just to enable, the collection of taxes, they gave it as an incentive that you can collect the input tax, right, and give us the remainder, all right? So, but that's not an obligation. If you don't collect your input taxes, they're not going to penalize you. If you don't account for those, if you don't deduct them, they're not going to penalize you. Is that clear? Good. So don't put such points and expect to get any mark. Excuse me. Now let's do. Let's raise the third point. These operators should keep records. Should keep accurate records for at least 6 years. They should offer themselves for similar inspection as and when required. As and when required. They don't give notice. Sometimes they just do random sampling and they come to your premises. Please, if you're a VAT registered operator, allow those guys to enter. Otherwise, you'll be in hot soup. Is that clear? Good. Okay. The fifth one is actually obvious. You need to issue tax invoices on all taxable supplies. We need to use the tax jargon for us to pass these papers. Otherwise, if you simply just say issue tax invoices on all sales, you're not going to, to sound, a bit pragmatic. You need to show some form of maturity in the subject area for them to award you a pass mark. All right. Can we raise another point there? Another point. I'm sure during the first recording, when we were attacking the theoretical aspects of VAT, we talked about situations when businesses cease to trade, either because there's no longer business. In those situations, you need to account for closing stock. So the point, accounting for VAT in closing stock. Upon cessation of trade or business, you need to account for VAT in that closing stock and remit it to Zimbabwe. Is that clear? Okay, good. Let me tidy up the screen as we proceed with our question attack. So you can see that we asked you theory, and some of you would have been dazzled, right? Would have been thrown overboard just by theory. If you do not watch these videos, if you do not revise the whole syllabus, you're going to be thrown outside the window. Okay, now let's proceed, guys. State what actions Zimbabwe will take to ensure compliance with the VAT registration requirements. They're not going to sit down and watch. They're going to penalize you, all right? But let us list what they're going to do. Usually, they're going to impose or charge. Okay, they're going to charge 100% penalty on the VAT outstanding. So let's say if the VAT was $100, they are going to charge another $100 on top of the VAT. So to obtain the VAT outstanding, they are going to backdate the VAT to the dates when the minimum registration threshold was met. Okay, they're going to backdate the VAT to the dates when the minimum registration threshold was met. All right, then they're going to compute VAT from the date the minimum threshold was met. Actually, they're going to compute VAT, or let me just say output tax. Okay, they're going to compute output tax from the date the minimum threshold was met. So in this case, from the month in which the minimum threshold was met, that is from from March to July. Well, in July, that's when they became compliant. So March, April, May, June, they were compliant on 1 July. So at the end of June, that's when they're going to stop. All right. The penalty, which we talked about, is only charged on overdue, right? Which means that is from because the VAT was due on the 25th of April, all right? So that's when it became overdue after the 25th, all right? So they will be calculating days after the 25th of April, exactly, all right? They are also going to charge interest, okay? Of how much? Of 10% per annum. They're going to charge interest of 10% per annum on an outstanding output tax. Do not expect to produce what the examiners really write, because of exam pressure, you won't catch up with the time. So you need to be on fire. All right, at least write something sensible, but do not constrict yourself to perfection, because by the end of the day, you are going to finish the exam and you will lose everything and start afresh. So you can't afford to do that. Just write a little bit and jump over to the next question requirement. Okay, let me tidy up the screen. Okay, the other requirement was that requirement B, sorry for that. Requirement B, calculate FT's output tax liability and exposure to interest and penalties which arises as a result of their VAT registration on the 1st of July. Okay, so we come back to the question. Right now, we now need some computations. So we should then have the board clean. Let us just do the computations on this space so that we won't disturb ourselves unnecessarily. Okay, good. Now, these guys became compliant when they became compliant on 1 July. So which means we are going to this figure, okay, the July amount is not going to be charged. So the VAT outstanding, the output tax, let us determine the output tax. The output tax to be considered should be the one for March, right? And in March they sold, goods exclusive of VAT, right? Remember, these figures are exclusive of VAT. Why? Because actually they were not compliant as they started, right? However, they become compliant. It doesn't mean that these figures are now inclusive of VAT. No. But what I wanted to just point out of that, usually as the company was still starting and not compliant, obviously we cannot expect them to have VAT inclusive sales. Right now, the figures, you should assume that they were not inclusive of VAT. All right, just tell yourself, as given by the examiner, they were not including VAT. So let us determine the VAT component in them. And we say that in our previous video that if the figures are VAT exclusive, you just need to multiply the amount by the standard rate. Is that clear? So we are starting from March. Okay. So this was the month at which the minimum threshold was met, and the minimum threshold was 2083.33. Please bear that in mind. So you will multiply by 15%. Okay, just do these workings on the answer sheet. I mean, on the answer page or word processor or spreadsheet in the exam. All right. So this gives us an output tax of how much? Let me try to use the calculator. Let's say 2,200 multiplied by 15%, or can just say 0.15. That's 330. And then we come here again. So you can see that on Excel, this could be a bit faster, right? Here that's 2.8 multiplied by 0.15. That's 420. Then this one multiplied again, we multiply it by 15%, and 5.3 multiplied by 0.15, 795. And lastly, June, 15%, 6,200 multiplied by 0.15. That's 930. Okay, and the total input tax. Okay, so that's 930 plus 795 plus 420 plus 330. That's 2475. All right, so this was the output tax due. All right, not really due, but overdue. When did it become due? It became due on the 25th of April. That's when it was supposed to be paid, right? But they didn't do so. So it is now overdue. All right. And like I said, Zimbra backdates the overdue taxes to the month at which or on which the minimum threshold was met. And that's March, right? So we are going to include the March VAT, April, May, June, up to the date when they become compliant. So we're going to charge 100% penalty. So we're going to say add 100% penalty. Okay, so that's 2475. Okay, and then interest, that's 10% interest. And 10% of 2,475 is 247.5. So what was the question? Let me just check. The question was saying calculate out tax liability and exposure to interest and penalties, which arises as a result of the VAT restriction. So what the examiner wants in this situation is that we present we present the figures separately. So they want the output tax exposure or liability. Sorry, let me just say output tax liability. The output tax liability is this one. Okay, we have calculated it as 2,475. So we need not to add here because we are presenting the figures separately. So we then tell the examiners that these are now the penalties, and that's exposure to interest and penalties. All right, so I think we're now in the right direction. Okay, so we can as well put exposure to int and penalties, interest and penalties, you underline, all right, so that you earn your full marks. Otherwise, if you're not organized, you might lose some marks along the way. All right, so you add up the figures 2.475 plus 247.5. So that's 2722.5. 2722.5. That's the total exposure these guys have sustained from the delayed registration. So there is the VAT outstanding that they should pay. Then they also have to pay the penalty for the delay, as well as the interest to the penalty. They won't do it again. That's the idea. The Zumra would want people who are very, very compliant. Now, let's finish up. I think we have done almost 70% of the question, if not 60. Calculate the amount of input tax recovery forfeited by FT due to the VAT registration on 1 July 2024. So because they have delayed, they have forfeited some VAT, but the examiner wants you to show him by how much. How much have they lost? That's the question. Okay, the question is as simple as drinking water, but it might as well confuse you if you are not organized. Remember, we have used data of non-compliancy from March to June. So similarly, you just have to use data from the purchase side in that same period. Okay, so here now we are being told that these figures are VAT inclusive, which means for you to obtain the VAT component, you then have to say standard rate divided by 100 plus standard rate. The standard rate is 15%. So that's multiplied by 15. Remember, we are starting on the February figure, isn't it? We are starting on the March figure. Sorry for that. So we are starting here. So that's 15 over 115 multiplied by the amount there, which is 2.1. All right. Like I said, you can first of all add the applicable figures, and then you simply just multiply by the appropriate fraction. So here, what do we get from the calculator? Let us do it step by step. So we are saying 2.1 multiplied by 15 over 115. That's 273. 273.9. Okay, 0.9. Then we'll do the same here. Multiply by 15 over 115. 2.5 multiplied by 15 over 115. That's 326.1. 326.1. Then 3,200 multiplied by 15 over 115. This should give us the 20 multiplied by 15 over 115. That's 417.4. 417.4. All right, so we have done March, April, May. Now, June. In June, you can see that they bought goods from a non-registered supplier. So in that case, you multiply by 0 so that you get a 0. Is that clear? Good. Then after you do that, you then sum up, you sum up and get the total amount of input tax which was forfeited. So what is the total then? We are saying 273.9 plus 326.1 plus 417.4. Then that's 1017.4. Very straightforward, isn't it? So this was the amount which was forfeited. Like I said, please, you need to write all this information on your answer sheet. Otherwise, you might lose it. So we've done this part again. Now, this is the last part that is going to add us the majority of the marks to ones, 4 marks. We can't afford to lose those ones. They're too much. Okay, let's to have space. Good. So for us to determine the VAT payable by this company, we need to consider the output as well as the input tax. Okay, guys. I think I'm chilling. Let me just wear my jacket. Sorry for that. Sometimes, the weather puts you on in an uncomfortable position. Okay. Now, the question wants us to determine the VAT payable. All right, VAT payable. These guys became compliant on 1 July. All right, that's when they became compliant. All right, excuse me. So we are going to consider the VAT, I mean the output tax from the date they were compliant. All right, and the input tax from that date. We are not going to compute input tax. I'm sorry, the electricity is gone. Let me try to use my flashlight. Just for you to see my face, guys. I love you so much. I love you guys. All right. So what happens is that we're going to use information from the month in which they became compliant. So let us do that straight away. Otherwise, the computer will run out of battery. Okay, so right. So yeah, let me just use this space. So output tax. We are considering sales from July. So how much were the sales from July when they became compliant? July. Okay, so July is this one. We start from this point. So that's 7,500 plus 4,500 plus 8,600 plus 8,900 plus 9,400 plus 10,000. So the total sales were 48,900. 48,900. But these sales were exclusive of VAT. So for us to get the VAT, just multiply the figure by 15%, which is the standard rate, and we get how much? Calculator multiply by, just multiply this by 0.15. So the VAT total output tax, that's 7,335. Let us cross check. Yes, 7,335. Now we come to input tax. The input tax, we need to only include purchases from registered suppliers, okay, from July. From July as well. So we come to our figures. Where are they? Figures. In the exam, we need to ask yourself, figures, where are you? So which figures are we looking at? We are looking at figures from July, and the July figures are these ones. But we are only going to take the figures which are applicable. Now in July, they again bought from an unregistered supplier, so there is a zero. We are not going to consider that one. And here they also bought from an unregistered supplier. So those are the figures we are going to exclude in our computation. So we are going to start from 2,200. So that's 2,200 plus, it's coming darker, plus 3,900. So see now, make sure light. 3,900 plus 3.7 plus 5,500, because we are skipping that one. That's 15,300. 15,300, that's the figure we need. 15,300. Okay, but this amount was inclusive of VAT. So we're going to say multiply by 15 over 115. And what is the figure we get for output tax? Input tax. So we multiply this figure by 15 over 115. So we are looking at 1,995 point, towards the decimal place, 0.65. Okay, this should be negative. Then other expenses, we need to consider those other expenses again, because they give us information which is relevant in our company. Now remember, the other expenses being expenses, it means they should be deducted from the output tax. They are part of the input tax category. Okay, so remember, purchases are to some extent costs, right? So they just have to be accounted for as expenses or costs, right? So the other expenses have to be accounted for the same way as the purchases, right? So this is why we are saying they should be deducted from our tax, right? They constitute, or they are what's called input tax, right? So we are having these figures. Three of them are going to have figures, whereas the other one we are going to put a zero, right? So the other ones are going to be as they are, right? And only payroll cost is going to be given a zero. So we start with the motor vehicle expenses, which was 2.4 according to the question. So we come here and say motor vehicle expenses 2,400 multiplied by 15 over 115. Then we come to the other expense. What was it? It was stationery, which was 1,000. Stationery. This was 1,000 multiplied by 15 over 115. And the other one was it fuel? It was other office expenses. Other office expenses 900. Other office expenses 900 multiplied by 15 over 115. Now there is that other one which we say it payroll costs. Payroll costs. If you don't write them, they're not going to aim in the house mark and relate it to them. All right. So these ones you simply just have to say they actually not VAT chargeable, right? They are exempt. Okay. So put a 0 there for payroll costs. Now let us do the computations using our calculators. Let's start with the 2.4 multiplied by 15 over 115. We get 313.04. 313.04. Okay, let's move on to 1000 multiplied by 15 over 115. 130.43. Right. Then lastly we have got 900 multiplied by 15 over 115. 17.39. So these figures are negative, then brackets. Okay, so we start from above there so that we get the difference. So the output text was 7335 minus 1995.65 minus 313.04 minus 130.43 minus 117.39. That's 4778.49. 4778.49. So this becomes the VAT payable. As you can see, the output tax is quite larger. It's quite larger than the input tax. So this is why we ended up having the VAT payable. So there was also a tip that the examiner was actually telling you, tell us the VAT payable. I will be shocked to find a student having a fundable as their answer when the examiner is actually at you that you just have to calculate and produce a positive figure which is payable. But somebody could find another figure there, which could be a shocker. Now, I'm sure we've done justice to this question. It's an interesting question. As you can see, it has helped us to revise almost everything related to our subject of interest, the VAT. So, please, if you found the video to be helpful and worth of sharing, please do so. Do the sharing. Subscribe to the channel. Tell your friends about the ACCA tutor so that we start together. All right. This journey needs commitment. So companionship is very important, and we need friends as well. So please do not walk alone. Come to the ACCA tutor and do everything together. Until we meet again, may the good Lord continue to bless you. I am signing out. Bye.